Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, guys. Despite on the dramatic action on the euro currency yesterday, today I would like to talk on the Australian dollar. So initially I will show you the picture on the euro currencies, just you to see that our butterfly here has been completed. So market, recall that in the weekly research we're still gambling how market will do this, since it's really too extended on the overbought, and we said that one of the scenarios could be if market will creep inside of the overbought and hit the target, then return right back down. So right now you can see that the butterfly's 127 extension has been completed. Market right now turns in retracement. So the first part of our analysis has been done. Now we should wait for a bounce down and whether we will get the further continuation to the upside. My thought is that we will. And the 119 area right now seems very probable, so it's just 400 pips above the current market. But today, guys, I would like to talk on the Australian dollar, because currently market has achieved and reached the level that we have discussed previously. Maybe you do not remember this, but within the recent 3 weeks I closely watch for a New Zealand dollar and Australian dollar, because market right now is forming the thrilling setup as on the Kiwi as on the Aussie. Because both markets have hit extremely significant supports. I will talk on Australian dollar, but on the New Zealand dollar you will find the same setup, and they potentially look very they look very promising and have solid potential for the trading. If even this will be the minor bounce, just as a respect of the significant support area on the monthly chart, on the intraday charts, on the daily chart, that will be a really significant rally. Also, guys, I would like to bring 2 cents on the current situation on the financial markets, on this miserable plunges across the board in the equities and commodities and other. So I don't want to repeat all this stuff concerning the slowing down and the Chinese market and the slowing demand on the commodities, and since the economy is chilling out, this could be the currency war between the devaluation of the yuan and United States dollar and so on. I just bring you just one fact, is that within the recent week there were 3 plants in the China that have been exploded. The first strategy, if you remember, was a couple of weeks ago. This was on the chemical productions, was a tremendous explode. But later, this was not briefly announced in the news, but if you will Google it, you will find that there are also 2 other plants have been exploded in China. One of them is the iron ore production and refining plant. Another one is also the chemical. I do not remember exactly the areas of the China where this has happened, but you will find it easily if you would like. I just want to ask you, when you have heard the last time on the 3 plants, well, this is not just a car or something, that's the plant. And when you last time have heard about explosion of the 3 plants within the 1 week? That's the first. Second, 2 days ago, the United States military base has been exploded in Japan. When you heard the last time that the United States military base have been exploded in any region of the globe? So conclusions and consequences you probably will find by yourself. So this sell-off is not just some market driving situation, market driving event. I suppose that this was planned, and that was well organized action in some sort of the economical the struggle for the economical domination and some sort of the economical war. because it's very difficult to suggest that occasionally all huge financial institutions will start to sell the same assets in the globe. So that can't be done just occasionally. And it's very probable that this will be another some sort of the action that we saw in the 2008. Because guys, if you'll take a look at the S&P currently, sorry that I turned to some another topic right now, we will return back on the Australian dollar, but I would like to show you the S&P index just briefly. It's a monthly index. If you'll take a look at the sell-off, that was the 2000 somehow the chart with S&P is just bugging. But if you will see the first stage of the plunge in the 2008 has lasted for the 6 months, and then the active stage has lasted also 6 months, but the range of each month was significantly greater. Take a look that later the first stage has been repeated in 2012, the same value of the drop, and take a look at this right now. If you will calculate the number of candles, 1, 2, 3, this is 5th month in a row of the drop, and the speed and the length of the drop is the same as it was in 2008. So following that logic, if we'll take a look just at harmonic action, we probably will see some relief here for some months, and that will be the moment of truth. If we will get another move down, and if harmonic swing will be broken on the S&P, that really could be some kind of the 2008. Maybe it will be not so as significant as it was, but anyway, this will be deeper drop, and this could be really another crisis in the financial markets. So now let's turn back to the Australian dollar. That's just my opinion. So I think that such events can't happen just occasionally. This is some really big forces and big powers stands beyond of it. And if they start to do something, they usually do this just drastically. So just a minute, it's lagging. I need to switch to Australian dollar back. Okay, so you can see why I would like to talk on the Australian dollar, because market has hit very significant support area. This is the major monthly FIB support, 71.82, the 618 support of the whole action till the 2001, from these lows to these highs. That is the 618 support. Market is not at oversold on the monthly chart, but this is very significant support. And if we suggest that market will show just minor bounce, for example as here or as here, that will be at least the 6, maybe 800 pips to the upside. So if even minor rally will happen, this will be probably 77, 78. So 600 pips could be the minor bounce. That's why it's very important. Now what we see on the lower time frame charts. On the daily chart, market already has formed the butterfly. Recall what we have said in this moment. 2 weeks ago we said, guys, probably we will see another leg down because the butterfly hasn't been completed totally, and that finally has happened. So you can see that market has hit 1618 extension of the butterfly, and this reversal pattern has been completed. Also, this is the daily oversold right now, maybe even monthly weekly oversold as well. Let's check this. Let's see it on the here, not on the weekly, it's not the oversold. Anyway, on the daily chart, this is the oversold, and take a look, that's also monthly pivot support 1. So we have the significant support cluster and reversal pattern in place. So this pattern will fail if market will continue move down and taking out of these lows, or maybe market will form something else. But currently, if market really has intention to show any bounce to the upside, all necessary conditions have been accomplished already. So the FIB support has been hit, the reversal pattern has been formed. So market should either show the upward action, or probably it will fail. Hardly we will see any Russian rinses here or something of that sort, because it's no foundation for this action. Now you can see that market stands in some starting of the retracement. So maybe later market could form even another pattern here. Maybe this will be head and shoulders, for example. If it will show the first bounce to the weekly pivot, monthly pivot point, then could form them head and shoulders, for example, and the upward action will take the shape of some ABCD pattern to the upside. In particular, this will point on the possible harmonic swing. So let's check this. For example, based on the butterfly count in here, approximately 177. So that agrees with some minor bounce on the monthly chart. That's what we will be watching for on the Australian dollar. So if you would like to trade this setup, so all necessary conditions stands in place, just calculate correctly your possibility, your risk that you could take. On the intraday charts, on the 4-hour time frame chart, recall our head and shoulders pattern here. So we said that as head and shoulders has failed, this has happened 2 weeks ago approximately. That was the moment that have given us the confidence that we finally should see this drop, since the butterfly hasn't been completed at that moment when this head and shoulders has started to form. So that was the big trap, in fact. So right now all patterns are in place. You could use for entry, you could use the most recent swing up in the retracement from the swing for possible taking the long position, if you of course would like to do this. So I'm not calling you to do this absolutely, definitely, because you should have your own opinion, your own view. But overall setup is promising. On the monthly chart, this minor bounce will not mean anything for the Australian dollar. So this minor bounce will be just a noise in the long-term action. And we can't count that this downward trend will be broken. We will not dare to think that this will be some reversal. We just would like to get some minor bounce inside of this trend. That will be sufficient for us. But as I said, this minor bounce could be really significant on the lower time frame charts. So let's see how the situation will turn.